Hey, Alpha fam, welcome back to another episode of Alpha Commission. You know what they say, what goes up must come down, and that's exactly what happened, right? So, of course, we had been talking about Bitcoin potentially breaking its wedge, the wedge that it's been in all of this time for the last, I don't know, the last month or so. And I mean, maybe it's even been like 2 months now. And so, of course, we're all getting pretty exhausted of the downside. And the best chances that Bitcoin had to get out of this wedge was up here, and then, of course, yesterday, right up here. And while we weren't able to technically break out, we did get wicks, and we also closed the candle body above our trend line. And it wasn't an insignificant candle, it was a 12-hour candle. This thing could have been just a bullish pullback. This is where I was talking to you about it, where if we had been able to pop above this trend line above it and then gotten to, 41,500, 42,000, and taken out that area, then potentially we could have worked our way up further. Was that unrealistic? Was that too moon boyish? Not really. We had done this thing before. We've done it before that. We've done it before that. And of course, in all of those cases, we did come back down as well. It's just been, you know, part of, the Bitcoin ride in this whole downturn for the last couple months, ever since November, that whatever goes up must come down. We are in a macro downtrend. That doesn't mean that there won't be days that are up and up significantly. It's just, it turned out that it wasn't going to be today, it was only going to be yesterday. And yesterday we did get a number of, good calls. Early in the morning, I had mentioned before the Federal Reserve meeting that there was a couple coins that had a good setup on them, and it turned out to be pretty good indeed. We got gains, around like 30%, 25%. The weakest one was 9%, but most of them were these double digits in the 30% range, with some of them 44%, 50%, and even 55% gains, which was quite good. Don't be afraid of trading at support when you do find support, but it should be solid support. We had one, two, three, and I believe we had a couple other supports like the EMA, the 89 on the weekly, which was a really good one that had been supporting us all throughout this period as well, right under us on this double bottom. And so this was a good trade to make. If you made that trade, there was no shame in taking that trade. That was an excellent decision. And again, like those who took those trades made good money. And I definitely don't feel ashamed for being bullish on that uptick yesterday. However, no one's perfect, and of course, I have to admit to my faults. I did not have my trend line lined up properly on the linear chart. I had it lined up, of course, but I was on the log chart. And so for these kind of shorter range formations, where there's not really parabolic action, right? This is parabolic action, right? These type of changes. That, of course, is where log really comes into play. But on these smaller movements, you want to make sure that you're double checking with the linear chart. And I can show you the difference. So this is linear and this is log. Linear, log. You see how there's a minor but important difference? And so depending on how you set that, you could miss where these wicks and where these candles are lining up at. And I did make that mistake. I thought this candle body was more fully outside of that trend line. And so that was my mistake. I do apologize for that, and I will try to be better about those type of things. However, it's kind of a minor mistake because we always have to have our stop losses, and where our stop losses will be, of course, in some type of zone up here, where if we had a bullish pullback, we would have to have a threshold of tolerance of risk, which, of course, if we broke back into the wedge, then we could potentially test all the way to the bottom of the wedge, and that would be the danger, right? Like that's why we wanted to sit on top of the wedge. Of course, if we were able to sit on top of the wedge, again, the number that would have made me bullish is that $41,500 to $42,000, and we didn't even come close to that. So not bearish, but not bullish. Just neutral, sort of like the Fed's decision. What ended up sending the market all the way down was the DXY. The DXY really took off as the smart money reassessed the market, and they decided that, hey, the Fed might be having these 50 basis points increases for potentially the next year or maybe even 2 years or so. And so it could get to be kind of a bumpy ride. And instead of deciding to take that ride, they've decided to flee into dollars. And so we saw this massive pump on the dollar on the daily, and that's what sent us just dropping like a rock in the charts. And it wasn't just us. It wasn't just the Bitcoin. It wasn't just the altcoins. It was the stock markets. They also took a big hit. When the DXY, when the US dollar rises, it's bad for stocks and crypto. What happened over here when we had the neutral news with the Fed is that I think it maybe just coincidentally aligned with this pullback in the DXY. And so that gave crypto and stocks some relief to be able to expand and have that really good day of gains yesterday, which we're all grateful for. But as the DXY recovered its standing, then I'll show you with stocks what happened. Just all of those gains got erased, right? And so if you didn't take your profit at resistance, which is where most traders will take their profits, then you're going to have lost all of the gains that we made yesterday. And so hopefully you guys had your stop losses in place where, let's go ahead and put the Bitcoin chart back on, where you probably would have decided, okay, I'm going to buy in here at support. We have a double bottom and there's lots of support under us. We're on top of the 89 weekly EMA, which has been support for a long time. And, we're taking this trade and we know that there's kind of this candle resistance area right here. So that would be a first take profit. And then we also know that there's some wicks that have gotten up into this area. Let's look at the shorter time frame. Like these ones right here, right? There's this, there's just these like intermediate areas, like this wick and this wick. And so maybe there could have been a little level right here that you take your profit, and then at the actual resistance itself, and then at this, this prior support that had been flipped into resistance. That's probably where you would want to take the majority of your profit to get out of this trade. And that's exactly what the smart money did. They pumped this to the top of the channel. It broke out. They hit this support that has flipped into resistance, and then they got out of their trade. And they decided it wasn't worth getting back into the trade when the DXY started shooting up. And that's why we just broke all the way down, right? And so how do you prevent yourself from being hurt by that if you were in a trade? It's simple. You would have just put your stop loss in a reasonable position. For example, right here, right? So if we had reached up here, you would have moved your stop loss up to here on the trend line, or perhaps even a little bit lower. Or you could have even gotten into, just above your entry price, assuming you entered down here. And then, if we had just a bullish pullback and then continued on our way, you would have had no problems. But in case we had a deep fall, you would have gotten out, pretty safely and in profit. In profit is the key point. So of course, this is stuff that you're going to have to learn, through experience, and most traders kind of intuitively know this by now. But there really was a good chance that we could have had a decent breakout, because this was a full 12 hours that we spent in this area. And you can see in the past couple months, we've never once had a full 12 hours even near, and definitely not outside of, that resistance area. So this was really, honestly speaking, the best time to have been open-minded to the possibility that we could have some bullishness building up, as well as the markets being highly overbought. I mean, highly oversold, right, on the indications. And then this double bottom and support here just could have given you a little bit extra confidence to take this trade. And although you would have a stop loss somewhere in this area, nobody should blame you for having some type of bullishness that there could be the possibility to get back up here. And again, that would have been very Bitcoin to do, because same thing happened over here, same thing happened over here, same thing happened over here. And if we had done it, it would have been just a great trade. The risk to reward was not so bad if you had your stop loss in a reasonable position compared to your entry, right? Okay, guys, so that we got that out of the way, of course, the DXY did end up pumping, and the stock market did lose all of its gains. And of course, Bitcoin follows the stock market, and so we did just drop down. The key question here is, what would I expect next? I told you if we broke under 37,000, it was going to get pretty ugly. My last resort was 37,300. And then we had this kind of downward slope here. And so look at that, precisely 37,000. In the previous video, I mentioned if we lost 37,000, it could get ugly. And we have now broken down below 37 and also broken below this horizontal support. But moreover, if we look at the weekly EMAs, we're underneath not only the 89, but also the 100. And if we look at our 5-day, let's look at the 3-day. Yep, we've been under the 200. We didn't even come close to that. So yeah, I mean, it's just looking ugly overall. It's looking pretty bad. And on the monthly, this is what I wanted to show you. On the monthly, I had mentioned that if we broke down below 37,000, that this line would end up starting to turn down, right? It would start to turn down, this yellow line. And of course, it did start to turn down, and immediately we had this squeeze play to the downside. So that could potentially continue. And the levels that I would select for that is going to be what I mentioned before, 35,000 and 33,000. But let me go ahead and just, let's bring this back on, just to take a look here. So probably, I mean, we pretty much already wicked down to 35,000. It ended up being 35,500, but haven't taken out that region. Probably, I can probably just move this up. And if we come back down, most likely we're going to be seeing this one, which aligns up with some stuff back here, which is 33,500. And we really don't want to be entering this zone down here. So this was the area that I just mentioned, everything's gonna switch over. We're gonna be in a very risky spot if we break down into this area. And then if we break into this area, it's almost guaranteed that we're gonna start free falling down to these lower numbers. Okay, you really want to hold 33,500 and get some nice bounce off of it. Otherwise, I just think, we're going to continue down for sure. But so let's see how this goes. Let's see if we can recover these levels or not. If we look at the other charts, you can see that we did actually bounce directly off of this kind of chevron, this kind of triangle, where we had a bounce here, bounce here, bounce here, bounce here, and it just happens to have perfectly aligned with this trend. And so if we lose this trend, that's going to be very significant. And I think you can see that, how significant this support, this trend as support has been. And I was hoping we would get up to here into this 42 area, and then this 45, 46 area, and then this 47, 40, 48 area. But since we lost 37, we're at the bottom here, and if we lose that, 33,500, and then if we lose that, we really have to start considering our weekly EMAs, which is going to, potentially carry us down to 26 to 20,000. Let me turn this off. And if I put on my origin channels, of course, this is Bitcoin's real chart. This is linear. That's why I switch on log often, because linear it's very difficult to use. But log, we can see a little bit more level, and log takes into consideration these parabolic movements and kind of softens it. And so, of course, I made these alpha origin channels, not for any ego purpose. It's just that, some other YouTuber had like an origin line, and I found it pretty useless. I don't like that guy's origin line. It doesn't really do anything for me. I would much prefer, instead of using those origin lines, to use something like, what Ben Cohen uses. He uses various versions of like logarithmic regression tools. And you can see this is a very pretty demonstration of how Bitcoin moves. But where these kind of high value areas are kept at the bottom, and where you can see kind of the middle is, and the higher you go, the more, of course, overbought you are. But this is very hard to chart because they're rounded. And then you have other tools like the Mayer multiple and this sort of thing, which I like this because it reminds me of EMAs. I like this. Let me turn my EMAs off. But and then I'll turn this into a bar graph or a line graph. And you can kind of see how we're moving through it, but it's almost like a Bollinger Bands. But again, like because it's so curvy and wavy, it's just very hard for planning. And so the reason why I created the alpha origin channels is so that you can have some type of easy planning for where you would like to buy in and easily see how Bitcoin is moving in these channels that have been carved out since the beginning of time. Of course, you can arbitrarily set these levels anywhere. And so some people can say, yeah, well, this is arbitrary. Yeah, well, this is the one that I'm making. And I think it works really well. I mean, I think it works extremely well. I've had multiple versions of this, and I fine-tuned it so that I think it's nearly perfect now. Okay, I think this is probably almost the final version. And what you can see is breaking this midline, which we did, puts us in danger of the lower levels, and it just always has. It always has. Here we were chopping through it, but breaking down is what we really want to avoid. Look what happened right here. And look at this, guys. This is just so amazing because it lines up absolutely perfectly. Support, 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 breakdown. All right. Resistance, chop, rejected, right? Support, 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 breakdown right on this yellow line. Right? Look at the support. right? Using it as support, breaking down, breaking back up. Like this was very key to this run. And you can see like where we've been using support. You see these wicks right here? Support, 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 breaking down. And we've broken down from it. So that would suggest we're going to keep going down, guys. I really wanted to be bullish. I really, really wanted to be bullish. I would prefer a bull run to breaking down. I would rather, our spot traders be able to, put food on their tables and just go for some type of little run. It didn't have to be the biggest thing. It could have just been a little run, but we weren't able to get that. And so as traders, you have to be able to flip from bullish to bearish every single day, right? Even every 4 hours if you have to. You're not a perma bear and you're not a perma bull. You're allowed to change your mind, and only idiots don't change their minds. Only idiots say always up, 100K only, and only idiots are only looking towards, 14K or 10K and thinking that we can only go down. It's not true. And so what I'm using this tool for, which again, I created for my own personal use. If you have any use for it, you can consider to copy the kind of levels that I have marked out here. I think it's a really good tool. I'm calling it the alpha origin channels to just separate it from those type of origin lines that other people have developed and perhaps their own style of where they set their levels. But I like this one, and I think it works really well. And if you put these other tools on top of it, you can just see the difference in how you can cleanly plan off of mine versus these other tools, which are beautiful, but it's just very difficult to plan off of. And I love Ben Cohen and all of his mathematical work that he thinks about Bitcoin, but I just can't think in arcs. I can't think in curves. I need straight lines to work with. And so these are the ones that I'm making. Okay. And if you have any use for that, yeah, I hope it helps you out too. So the conceptual thing here is that this green zone is, in the beginning, of course, you wanted to buy as much Bitcoin as you could. If you were able to buy any Bitcoin back here, like congratulations, like you won the jackpot, right? And that green area will always continue to be the highest value zone. And only during COVID did we ever come back to it. If we cross below that red line, just buy whatever you can buy, sell whatever you need to sell to buy whatever you can buy, because it's going to be the best opportunity of your life. However, above that, in this kind of blue zone, below the yellow band, you can start DCAing in down, and then also if we start crawling back up, then you can start DCAing back up. Like all of these areas down here are good DCA zones, and I don't care what anyone tells you, all right? As long as we're below this yellow line, they're good DCA points. You probably want to use some type of strategy, such as like sitting at like 33,500, which is the next level that I was talking about, and then perhaps the one next below it, and then the one next below it. And if we ever turn around and just maybe we don't reach the bottom, if we ever turn around, then you could do the next one, up and just get a little bit extra. And if we come up to this yellow line again, you can sell. You can take your profit, because sometimes we do come back up to the yellow line and then we end up falling back down. And if that happens, you want to make sure that you have money and that you took some profit on what you bought down here so that you can buy again, right? You don't have to be a holder. You just have to make sure that you are buying when you do get those retracements, because the biggest mistake that a lot of people make is that they sell their coins and then they just never get back in the market, and then they miss out on the bull run, right? So if you had bought in here and you had sold a little here to take profit and a little here to take profit, then you didn't get this run and you didn't get this run if you never came back into the market, right? Or worse, if you had bought up here and then you sold down here in a panic, and then you sold up here just to try to get some of your money back, you missed out on this bull run because you didn't buy back in. And that's why hodlers, people who hold their coins overall will win in the long run. It's just they may have to wait, 1 year, 2 year, 3 years until they could break even if they bought on this pullback and held. They'd have to wait 3 years until they got to a similar level, right? And then they might have to wait months. They might have to, but traders can be taking profit and then buying low, taking profit, buying low, taking profit, buying low. And so they can make much more money, but they have to be brave enough to buy again. They have to be brave enough to buy again. And this market is designed to exhaust you. So know who you are. Understand if you're a hodler or if you're a trader. And if you're a trader, remember to have your strategy to buy back in so that you don't end up losing more in lost opportunity than if you had just held. And if you're a hodler, you have to understand your time threshold because these bear markets can last like several months. They can last a couple years, right? This amount of time was 400 days, right? So this was a year, right? And so you may have to hodl for a year before you start seeing really good price action. And so make sure that your tolerance is somewhere between a year to 2 years if you really are going to be like a strategic hodler. And if you're a trader, make sure that you have your disciplined principles in order, that you understand your stop losses, you understand how and when you're going to take profit, you understand what levels you DCA in, and also what levels you're DCAing out in order to take profit just in case we fall again, so that you always maintain a certain amount of your portfolio in cash, meaning that you can buy lower in case there is a big dip, right? And a lot of people recommend at least 20% in cash, even if you think you're at the bottom. You don't know, you could go lower, and you would want to have that 20% cash in hand. And you can always use it to buy, up. But there will be a retracement at some point, no matter what happens. And so try to always keep a certain amount of your money in cash available. Don't just go all in. And when you're trading, when you're doing a trade, my friend Crypto Retta limits it to like 10%. I try to limit it to 5%. Other people might recommend like 2%. But whatever your threshold is for risk, just understand you shouldn't go full port on any one particular trade either, right? So as we go forward, these are the things that you really want to really start thinking about, as well as what are the really good projects that if you had to hold it, you're willing to hold it and that you think that they can endure, because some projects will just die during a bear market. Okay, guys, I didn't want to go too long on this one. I just wanted to give you kind of an idea of where we were. And of course, if we put on the 5-day Gaussian channel, again, the thing that I've been talking about for months appears to be happening. It appears to be happening. And let's go ahead and look at that death cross. Lo and behold, it's happening, right where I suggested, with this red line. Can you believe that? You guys probably remember I've had this red line marked out for quite a while, and it appears to be happening right between this red line and this yellow line. I don't even know how long I've had these out. It must be a couple weeks that I've had this marked out where I thought that we could have this breakdown, and it's just happening. So there's a little bit egg on my face that I was bullish yesterday, but there was a good reason to be bullish yesterday. You don't want to be just a perma bear and you don't want to be a perma bull. So there was good reason to be bullish yesterday, but today I had to flip. And now we understand that we are potentially heading down. And if we do start to recover levels, then I will flip again. I do not promise to be a bear or a bull. I will only be an alpha monkey, and I'm going to trade and try to, make it in this market, which is constantly trying to destroy people. All right, guys, that was your alpha for the day. Stay safe and happy trading.